How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for August 21st, 2018. And here is a snapshot of the institution's positions as of that date. So let's take a look at gold. So looking at gold, we can see that since June 12th, the institutions used to have 72,000 positions short, and now ever since that day, we've been increasing from 106, 118, 32, 160, 70, and now we're at these limits here, 222,000. This is extremely aggressive, okay? And it leaves one to wonder how many more positions can they add short if they are already this aggressive with their shorts, okay? Now I've mentioned that we're in this area here, a monthly bullish engulf. And typically when we're hitting monthly bullish engulfs or weekly bullish engulfs, there's always a reaction. But there's typically a reaction from areas like this, okay? And we're starting to get that reaction right here. But this is the thing that I want to focus on here. The aggressive nature of their short positions leads me to believe that we're going to see a further push to the upside. Now, there is a weekly area of demand nested down here, which would have made a nice trampoline to propel price to the upside, but doesn't seem like price even wants to bother to get all the way down there. So watching for this, because I think just by looking at the data here, even though it's 51 and 49% to the downside, I think what the institutions are going to be doing is taking some profits on these short positions and causing price to move to the upside. Okay, so being cautious about that. On oil, what do we see here? So there is a big increase in shorts as price was testing this weekly area of demand. Okay, so big increase in shorts, which caused the price to drop into that weekly area of demand. And we see a little bit of profit taking on long positions. So now we have a reaction from that weekly area of demand to the upside and right into a poorly formed weekly area of supply. So if you take a look at the exposure here, 86% is geared to the long side, 14 is to the short side. So we can see that they have been very aggressive with their long positions, quite aggressive, and their shorts have been very cooled off to some extent. Okay, slowly it's getting a little bit more to these regular numbers, but still under the average size. Okay, longs are under average size, which is a small indication that we are expecting a bigger move to the downside. The thing is, this one is very correlated with the US CAD, and we have reason to believe that the CAD may continue to get stronger. So there's a possibility that we see a further move to the upside like this. But just focusing on the CFTC data, very aggressive. Longs under the average size. This is slightly favoring some profit taking, but nothing quite concrete just yet. So we take a look at the US dollar, and what do we see? The longs are slightly aggressive, but nothing to the extremes. And shorts have been very cooled off. So with longs being aggressive and shorts being cooled off, that enabled this big rally to the upside like this. Now this data represents this area here, this candle pushing to the downside. So we can see that eventually price dropped down into this weekly area of demand. And longs are still aggressive, shorts are still cooled off. 80% geared to the long side, 20% to the short side. When examining this chart here, I've made a post on the latest report submitted to members detailing the issue with this formation here. So if you want to get more information on that, take a look at the actual report that was sent this past weekend, and you'll see what I'm talking about in relation to this formation. But this formation here leads us to believe that we're going to see some more profit taking on these long positions. They're slightly aggressive, which means there's more room for them to add to their long positions, but I don't think that's what's going to be taking place just based off of what I see here. Okay, let's take a look at the Aussie US dollar. Now, we know that there's a tested monthly area of demand and control, but we also know that shorts have been aggressive and longs have been cooled off, which has helped to facilitate this move to the downside. So the sentiment is still bearish, and we are slowly getting a little bit more aggressive with total size. The most they've ever been aggressive is right here over the last few months. Actually, all year was May. And if you take a look, March, April, May, I believe that took place right in this area here, where they were the most invested, should we say, in the Aussie, with 95,000 positions short and 75,000 positions long. So we've since had a drop, but we've seen that the shorts have been reduced from 95,000 to 75,000, and right now shorts are right about average size. Okay, we were extremely above average size, and now we're inching towards average size. Whereas here on longs, 25,000, we're still sitting below that average size. What this suggests to me is that there's a potential for a move to the upside from this area here and some profit taking on shorts. But we still haven't seen any massive profit taking in the last few weeks. I mean, 73, 75, 77, a slight reduction in this past week, but nothing very significant. Okay, so watching this to see if indeed that's going to change in the weeks to come. Taking a look at the US CAD, right now we are testing this weekly area of demand. A first test, a move to the upside, and we're coming back down, testing the ascending weekly trend line right here, and increase in longs. Okay, so as price was dropping, they increased longs, and they also increased shorts by about 2K. Bottom line is the sentiment remains neutral, regardless of the fact that long exposure is 65% and short is 35%. So again, the coloration of the cells coming in and telling us, don't worry about the fact that the institutions are 65% long. Right now the sentiment is neutral. And it's good that it is, because considering what I am seeing with the US dollar, there's a very good chance that this is not going to hold, and we're going to start seeing some profit taking on longs or increases in shorts to allow price to drop potentially a little bit further down the chart. Okay, so we're going to be watching this over the next couple of weeks. US Swiss franc, we see an increase in longs and an increase in shorts, and that comes as price was consolidating right here, right before the drop came through. Now there was a slight decline in long exposure by about 1%, but that really is not of any importance, and a slight increase in net positions from 45 to 47 positions in the positive. With price dropping down right now, it leads us to wonder how far this is going to go. We are now testing the top side of this descending monthly trend line, and I think over the weeks to come there's a very good chance that we see price move down to this area here. Okay, but for that to take place, we're going to need to see an increase in shorts or some major profit taking on longs. Longs are very aggressive, so they could use a little bit of a profit taking period, but eventually I do think that price is going to be going a lot higher. So the strategy I'm going to be watching for them to use is some profit taking on longs, causing price to drop, maybe increasing shorts to profit on the move on the way down. And then once price starts to get down to this area, I'll be watching for an accumulation of a bigger long position, and then I'll be looking and interested to take long positions from down there. Euro USD. So just like with the US dollar, the formation of the candles here leads me to believe that a bigger move to the upside is going to take place. Now, I've been mentioning on previous videos that long exposure has always been somewhat aggressive. Now we've seen since May, the institutions have been making their shorts a lot more aggressive, from 100,000 to almost double that since May. So they've been preparing for that, and this big increase in shorts has helped facilitate this move to the downside. But I've always been wondering what they were going to do with this aggressive nature that they have with their long positions. Holding such long positions and causing price to drop all the way down here doesn't seem to be a good move from my understanding of how the institutions trade. So now with this new look on the charts and the new evidence that has unfolded since last week, I think it builds up the argument that a move to the upside is most likely going to take place, because that would help to close off some of these long positions that they were opening all throughout here, up at higher prices, which is what I would think they would want to do, and then accumulate more of a long position, or a short position I should say, for a bigger move. Because you can look back here, these are, or sorry, I'm looking at here, these numbers here are in the hundreds, low hundreds, compared to where we're at now. I mean, they can definitely start taking some profits on shorts, let it come up here to maybe these numbers here, and then aggressively add again to those short positions. Okay, so I'll be watching for that, because I think that's what's going to be taking place. And here's the biggest reason why. Again, just because of the aggressive nature of their long positions. It doesn't make much sense that they would move it all the way down here. Okay, so let's take a look at the pound. And what do we see? We see an increase in longs over the last few weeks. Actually quite significantly if you take a look. Back in July, at the end of July, longs were 32,000. They've doubled, more than doubled. Okay, very much over the average size. Shorts are very aggressive. Okay, and looking at the coloration of the total positions, we could see that they're at extremes. So it would make sense to see them take profits on some shorts and cause price to move higher. So this fits in with what we see with the euro. It also fits in with what we're seeing with the US dollar and with gold and with other pairs, and we'll get to those right now. Kiwi. So examining the Kiwi, you can see that short positions are aggressive at 40,000. So I went back and looked through its history. The full history of all the positions that the institutions have been holding on the Kiwi since they've been recording the data. And I noticed that every time positions got to these levels and these highs, what we saw was a move upwards. So this plays into what we are seeing with gold, the dollar, the pound, the euro. It all ties in together. So I think even though the charts are not suggesting that this is going to happen, the data is suggesting that there's a higher probability that we see this happen. Okay, so that is it for this week. Hope you'll use this information to make you some good positive trades. And until next time, have yourself a great week. Take care.